Hello everyone and welcome back. If you are a tax professional, accounting student, finance professional or someone interested in US taxation, this short video is for you. Today we are going to discuss one of the important IRS update for tax year 2025, the changes in retirement contribution limit compared with tax year 2024. So before we discuss retirement contribution, let's first see where this topic fits among the major IRS changes for tax year 2025. Some of the major changes for tax year 2025 include the standard deduction, federal income tax brackets, retirement contribution limits, and so on. In today's video, we will focus only on retirement contribution limit because this area provides valuable tax saving opportunities for many taxpayers. Our goal is very simple. We will compare tax year 2024, which was filed during 2025, with the tax year 2025, which will be filed during tax season 2026. Before comparing the numbers, let's first understand how many people actually file tax returns every year. This table comes directly from IRS filing season statistics. The IRS processes around 165 million individual tax returns each year. More than 150 million returns are electronically filed, and over half of those are prepared by tax professionals. Now that we have seen the scale of the US taxation system, let's understand what retirement contribution limits actually mean. I won't cover these slides today as that would make this video too long. I'll explain them in separate video. For now, let's jump straight to the comparison. So let's briefly review the major retirement contribution limits for tax year 2024. The annual IRA contribution limit was $7,000 with an additional $1,000 available as a catch-up contribution for taxpayers age 50 or older. The 401k contribution limit was $23,000 and eligible taxpayers age 50 and above could contribute an additional $7,500. The simple IRA limit was $16,000 while both the SEP IRA and the overall defined contribution plan limit were $69,000. These are the numbers many tax professionals used while preparing 2024 tax returns. The important question now is what changed for tax year 2025. Let's compare the updated IRS limits. For tax year 2025, the IRS increased several contribution limits because of annual inflation adjustments. The IRA contribution limits remain unchanged and $7,000, which means there was no increase in this category. However, the 401k limit increased by 5,000 by $500, which makes 23,000 to 23,500 US dollar. The simple IRA limit also increased by $500, reaching $16,500. The SEP IRA maximum contribution increased by $1,000, reaching $70,000. So now let's compare both tax years side by side. The first thing you'll notice is that not every retirement plan received an increase. For example, the IRA contribution limit stayed the same at $7,000. This tells us that the IRS did not consider an inflation adjustment necessary for this account. However, 401k and simple IRA limit both increased by $500 with the SEP IRA and the overall defined contribution limit increased by $1,000. Although these increases may appear small, they allow taxpayers to save more money in tax advantage retirement accounts every year. This is probably the most important update in today's presentation. Beginning with the tax year 2025, the Secure 2 Act introduced a higher catch-up contribution for employees who are between 60 and 63 of age. Previously, most taxpayers age 50 or older could contribute an additional $7,500. Now, Eligible workers between age 60 and 63 may contribute up to $11,250 as a catch-up contribution. Why did Congress introduce this change? Because many people realized they need additional retirement saving during the last few working years before retirement. This rule gives them a valuable opportunity to strengthen their financial security while also receiving tax benefits. Well, I'll save these slides for a dedicated video. For now, let's move to the next topic. So here we have the positive and the negative change. Well, in 2020-25, the positive change that higher employment saving and larger employer plans contribution, better retirement planning, and increase tax deferred investment. Overall, the IRS changes for tax years 2025 are positive. Another important observation is that none of the major retirement contribution limits were reduced. Let's summarize today's discussion so far. First, retirement contribution limits are established by the IRS and are reviewed regularly. Secondly, these limits often increase because of inflation, although not every account change every year. For tax year 2025, the IRA limit remained at $7,000, while the 401k and simple IRA limits increased by $500 and the SEP IRA limit increased by $1,000. The key message is simple. Understanding these annual changes helps taxpayers save more for retirement, reduce taxes where eligible, and avoid costly contribution mistakes. Well, I'm also saving these slides for a next dedicated video. For now, let's move to the thank you slide. I hope this comparison between 2024 and 2025 retirement contribution limit has helped you better understand not only the numbers but also the reason behind the IRS changes. Remember, successful tax professionals don't just memorize tax rules, they understand how those rules create more value and planning opportunities for all taxpayers. So if you found this video helpful, please consider liking, sharing, and following my LinkedIn profile. I'll continue sharing short practical videos on US taxation, IRS updates, and planning to help accounting and finance professionals stay current. Thank you once again for watching. Take care, keep learning, and I'll see you in the next video.